Hello everyone, I'm Dr. Stock, and in this video we're taking a look ahead at the economic calendar, and there's also something that I think that we should really pay attention to coming up, and it doesn't happen this week, it doesn't happen next week, it happens the following one. As a matter of fact, early on in the week, and I think Tuesday is that day. I will show you that coming up in this video. Make sure that you stay tuned for that. Also, do yourself a favor. Down in the description of this video, you'll find a link to Moo. By clicking that link and signing up, you can get up to 15 free stocks. $100 or more of a deposit will get you 5 free stocks and access to their free premium courses. And then $1,000 more will get you those 15 free stocks. Take advantage of the offer while it lasts. This does only apply until April 30th. So we are less than a week away before this offer expires, so take advantage of it. Also, do yourself a favor when you look down in the description, find that link for my Patreon, click sign up and get access to my Patreon exclusives and access to my private Discord community. So looking at the economic calendar, we have GDP coming up, and that I don't think is going to be too surprising for us. I think we're going to see strength as expected coming out of Q1, but really we want to take a forward look into Q2. How's that consumer behaving? And from that, when we scroll on down here, the personal income month over month and core PCE, those values that we get from all of this and the personal spending, that is all stuff that's going to tell us more about the consumer and how they were behaving in March of Q1, at least according to these reports, and then we really want to take a forward look from there. Just a quick side note for personal consumption expenditures, you can see the PCE and the sort of trend that we're on. If you look across the recent tops and the recent bottoms of this, it does look like we're going to land somewhere in the middle. However, if we look at it more across the middle of this thing, coming in 0.3, 0.4 would be pretty reasonable for what we have. If we see something below trend, that's always good for less inflation, especially with a Fed meeting coming up. And then here we have sort of a narrowing when we look at the core. So this is PCE X food and energy. So this should take out some of that volatility. And again, coming through across right about the 0.4 range, fine, 0.3, good. And then if we end up dropping below that, that's even better to see those measures come down. So we'll watch and see as they come out. We could get a really favorable read, and favorable inflation reads could help influence the Fed with their decision. That comes out on May the 3rd, which is next week, next Wednesday. We absolutely want to keep our eyes open for that one. Now, finally, this last tab that we have from the Federal Bank of New York, the Center for Microeconomic Data, we have the household debt and credit report. And this that you're looking at right now goes all the way back to 2004. You can see it spiking in 2008 and then lowering again. We have this local minimum value here in 2013, and it's been building ever since then, accelerating starting in 2021 that we see the non-housing debt and the housing debt both moving upward with each other. And so that can be pressure on the consumer, so that's something that we want to watch out for. Now, this is from Q4 2022. Well, Q1 finished, so when does this next report come out? Well, if you go to their calendar, and you can actually see, if you scroll down, and let me see if I can bring that in for you. There we go. May 9th is when we get that next credit report, and so that is a Tuesday. Not this coming Tuesday, but the following Tuesday after that, the second Tuesday of May. That is going to be a huge report to look out for to see how household debt is going. Did we get any sort of spike? Is it moving with trend? And then also credit, where is that sitting? And this is a very important report, in my opinion, that tells us a lot more about possibility of recession in Q2, Q3, Q4. What exactly does it look like for the consumer? How much debt are they taking on? Have they burned through their savings? These are all answers that we want to keep on seeking out evidence for one way or the other as we look at this. Backtracking time-wise just a little bit on this calendar, I also want to take a look at Monday, May the 1st, because Monday, May the 1st is where we get the PMI reports, the ISM manufacturing PMI, which you can see the previous numbers showed us contraction. Construction spending was down, contract. So those are all things that we want to keep a look on, and you can see for the forecast, at least for consensus and what we have through trading economics, that they're expecting it to be about even, just slightly on the growth side, that we're starting to expand again, which would be non-recessionary, whereas contraction is recessionary. So we definitely want to keep our eyes open. We have just a lot of catalysts coming up. We're going to have a really big week next week to kick off May. Not only do we have the FOMC meeting, but we also have manufacturing data that's going to be huge for us. We have JOLTS job openings, factory orders, the total vehicle sales, you name it. There is just a ton that's buried in the economic information for next week. And then, like I said, the data that we have coming out, the quarterly report on household credit and debt. That comes up even the following week after that. May is just going to be a big month. We absolutely want to watch out for what's coming our way and try to make the best plan possible. So here we're looking at the SPY. You can see that we're sort of range bound with how the SPY's been acting. So maybe we do see 50-day as support, maybe we do see 200-day as a support, maybe we do tag down below it just a little bit, and then we catch our stride and ride it back up. The RSI is currently sitting in a bearish position right now, so that's something to also watch out for. So we'll see as these reports come out what exactly we get from that, and hopefully we get a more dovish Fed than hawkish Fed. We're just going to have to see when that meeting comes out. We're also going to have to take a look at those reports that we get for any further sign of recession. That's going to be the big thing that moves the market, in my opinion. Taking a quick look at the Qs, you can see that we've actually had a slightly better run of things when we look at the NASDAQ 100, which is what the Qs track, and we actually dipped down into bearish territory with that as well. And we do want to be careful that what we're seeing here with a drop in that momentum, especially dropping down into bearish territory like this, and the fact that the prices for the NASDAQ have gone up anyway, when we look at the Qs, that we're not seeing some bearish divergence taking place, because that could be a strong sign of decline. So we're going to have to watch that. It is in the favor of these that Microsoft did so well, that Meta did so well, Google did pretty well as also. We do want to check out Apple as they come out with their earnings. That's next week. I believe that they report on Thursday after the market closes. That's May the 4th. So there's a lot to look at. There's a lot to digest going forward from here. And I'm most definitely watching these markets, and whatever I find, I will bring here to you on YouTube. So to wrap things up here, keep an eye on those economic reports, see what we got for GDP for Q1, and start looking to see what exactly the consumers are up to. Because to me, I think that the consumers taking up about 70% of GDP, they are going to be the ones to really decide the direction of the economy coming up here. That how fearful are people? Have they run out of money? Are they trying to save more? What exactly is taking place? Are they putting out the aggressive spending that they've done through Q1? Are they able to keep spending? That consumer debt report that we get coming out on May the 9th, I think is going to be a very telling sign on the track or trajectory that we're on. So I'm very, very highly interested in what we see there. Thank you guys for watching this video. If you like my commentary, check out that link for the Patreon and come on over and join us over there. We'd absolutely love to have you. Also, that link for Moomoo, go ahead and grab your free stock from there as well by signing up and making your deposit. I am Dr. Stock, Doctor of Education. We'll see you in the next video.